And I'm going to be take a conscious effort here to speak at a nice and reasonable pace. I hope we're all doing really well. My name's Rocky Outcrop. This is the Rocky Outcrop channel, and we do daily technical analysis for Chainlink, Tezos, Ethereum, and Bitcoin. 4 separate videos, so you can pick and choose at your convenience what you are trading at the minute. Although I would always say that the Bitcoin video has always got a little bit extra in there for the discussion, so that you can learn a bit more, talking a bit more theoretical about things. And I don't know, it's good. Whatever, it's up to you. I have to say, I massively appreciate just the fact that you're tuning in and viewing this video at all. Just, let it run on long enough so that it counts nice for the statistics, and you're a hero of mine. If you want to subscribe and all that too, then wow. What have we got on the go here? We'll look at that little wick that's on this candle right in at this area here, as we've been talking about. If I just expand this back up again, you can see that the 21 EMA hasn't really, quite caught the price action for us. The 55 possibly it has, just kind of can change this to 50 just to get a different sort of look at things and see that, of course, it's below the 50 as well. But I use 55. I tend not to think about these things really in terms of catching the price really, but I do from time to time. Overall, what we have is a higher low. It would be good to see this continue then, and this to be the higher low from this low, this high, and this low to then go on to make higher highs, would it not? What I want to see is the prices moving back up above the 382 Fibonacci retracement point here and going on up to this magnolia colored line, which of course is a 50% Fibonacci retracements from our all-time highs and all-time low areas as well. Now, I suppose we can look here just in terms of, and I've done this a few times recently, just in terms of how this shapes up with regards to if this was drawn in body to body with a Fibonacci retracement here, and you can see that we're just below this at 2961. So that would be my first target, the 21 EMA, all that sort of stuff, moving up above there and invalidate this Fibonacci retracement as it stands. I'll just move it up here so it's wick to wick, so you can get a sort of more perhaps bearish perspective on this thing, and say, what we need to see happen is the prices go above 3,000. As we know, really, we've spoken about it an awful lot, for us to continue this upward trend overall. So, it's between those two. I'm going to continue to take that off the charts for just now. Oh, actually, no, wait. Looking down the way, we came close enough with this wick to the 50%, and we're above the 382 just now on this one. Can that be the sort of a shallow enough retrace? Well, it's actually not shallow. The shallowest retrace would be the 236, but we've made it past the 382, the sort of the second shallowest one, and all the way close enough is close enough to the Dow Jones 50% area. Could that be enough? And congratulations to anybody then who longed it at 2,800 and whatever, and is then able to take profit right now, if you want to, off the back of this wick alone, with a solid 2.5%. That's nice, it's nice, right? So anyway, that's all very good. Let's just see if we can do this and maintain this structure overall. Looking at the oscillators, the highs, this high and whatever else, you could try and compare them. That's not bearishly divergent. You can see here that's just the one peak, really. It's unfair to compare these last two highs. Really, it's this versus, we're looking for this higher low to come in so that we can go on and put in a couple of local highs and local lows before we can really look towards divergence at the minute. We've done well. We had divergence here in the past, as we pointed out in the MACD and the stochastics, and we've come up to the oversold zone on the stochastics, and maybe overall this is just this resetting somewhat for the oscillator. As you can see here, I'll include more price action on the chart so you can see that there's this particular node kind of comes out right where the prices are right now, and then again the wick came down where it dropped off slightly, and it picks up again at the 50%. Should we need to go down, should it need to happen to have a full sort of retrace here to the 618, okay, that's okay. I want to see 2,800 and this green horizontal line we have here really be a turnaround point should that need to happen. If not, perhaps we're going to continue the downward aspect, and we'll have to recheck in on things. Final other things to kind of point out would be as well, like if you're looking at this and saying that this could be a shoulder, that could be a head, and this could be a shoulder, I would dissuade you from thinking like that, because that would be a regular one with a downward price action. I suppose you could maybe try and look for some sort of compound fulcrum type chart, but I don't use that P&L trading. I don't do. It's another way of doing trade. Forget it. I'm not even going to go into explaining what it is. Just whatever. I don't use it, but it's a Peter Brandt thing. Could we see? This is the second top here. I want to see, that top. I want the prices to come up and challenge this. Obviously, I think we all do at 3,800, but we have had volatility in the Bitcoin prices. I wouldn't be surprised, if we saw an upswing in the prices, if this price here of the Bitcoin turns around and does the descending, broadening wedge, especially, then we could see a decent enough rise just off the back of that alone. Let's look though at the dollar prices now. A thing that we do on Tezos quite often is compare the 277 price here on these exchanges, 278, 277 with the HIT BTC prices. Now brace yourself. Oh, we have done it today. We've moved above the 258 area. So you know me, right? Thank you so much for being one of my good friends now, everybody. You know that I like to look at HIT BTC for a bit more context on the market, despite the fact that I wouldn't trade there myself or recommend it to anybody. And I do talk about this as an arbitrage opportunity, which is something that I'm not a financial advisor. None of this is financial advice. You could potentially benefit from yourself if you are willing to go and trade there. We spoke about this quite recently and said what we want to see happen is for the prices over here on HIT BTC to move themselves up above this crucial 158 area, which we know, having looking towards the left, just we know how important that number is, moving up above it, and without these prices needing to collapse down to amortize with themselves. Now, this is now 16 cents apart. When it first diverged, it went to be about 15 cents apart. Then it went about 20, 25, 20 apart, and now it's back to being 15 apart. I'd like to see this continue. I'd like to see this continue towards the upside. As you can see, there's a subtle difference in the shapes of this consolidation phase here. Subtle difference. This is a low. This is a high. This is a higher low, and we could go on to put in a higher high up as far as say 265, and then think about things again, and that would be an upward trend. Which if the prices manage to go up further, then you'd see, as you can see here, if we can sustain this for a little while, we wouldn't actually have any bearish divergence on the go there. And indeed, if we can sustain this, then we wouldn't. At the minute, if it turned around, it would just be convergent, or if it sinks down a bit here, because that can happen, and this prices go up a bit, then it would be bearish. But it looks like we're going to be okay on that front. Going back over here again, you can see the subtle difference in the shape here, really overall, where this has been more of a triangle shape. And could it be the case that we're having a sort of breakout from this just now? Volume wise, I would certainly say no. This is a descending triangle as well, which is slightly more bearish, so that will temper your thoughts slightly. Then I'll just say screw it, let's go to equilateral symmetrical triangle overall here with this one. Say we're still inside it, and this has got a 50-50 chance of breaking either direction. Now if this comes up and hits this previous high at 280 and comes back down again, then we'll have an ascending triangle worth bearing in mind. You'll not find anybody else really out there in the world of charting be honest with you and talk about the different, because generally speaking, 9 out of 10 people who do this are just analysts. They don't actually trade, really, not proactively. Whereas if you're a trader, you have to be flexible and willing to change your opinions like that if you need to, which is why I'm pointing out the different dynamic here with these shapes. We're above the 21 EMA on the daily time frame. That's good to see. We're consolidating here. I'm not going to look for divergence down below. Just going to bring that up and say, could this be what we see? First off, 285. Then, if not, if we go up to there, that would be fake out territory quite easily from this as a symmetrical triangle. Now, I like to talk about fake out territory as an actual trader, because you could look at this, say it's a symmetrical triangle, get overexcited if it broke up here, say that we're going up to $3.10, and that would all be getting ahead of yourself when we know that the fake out territory actually would remain in place until such times as we're above the previous high at the very least, so I'd be cautious in this area, and then respectful of the previous areas before. The next one to then look out for as well, of course, is the sort of the actual previous high. This is the actual one back on the 29th, and this all could turn into fake out territory overall. It's marginal where you would draw this in at. So that's to be aware of, fake out territory for the ascending triangle shape comes in there. And you know what else? Overall, let's just leave this on the chart as this and say that we have an ascending triangle here, which we've been populating since the mid-April, really, in terms of the dollar prices for Tezos overall, just about. So let's just keep all these things in mind for the time being. Thank you so much for tuning in. I really appreciate the community out there. I massively do. I know I gush every video, and maybe down the line I'll reel it in a bit. But as an early subscriber to the channel, I massively appreciate it. And of course, share this video with a friend if you've got one that you think would like it, because a friend of yours is a friend of mine. And if you've not subscribed to the channel yet, but you've made it through to this part of the video, stop being a lunatic, hit that button and join the party. Thanks so much. I'll see you in the next video. I've been Rocky Outcrop. This has been Technical Analysis. Thank you so much for tuning in.